What is going on, investors? Hopefully, you guys are doing well out there. That is right. It is Friday, and it is the end of one of the more volatile weeks that we've seen in the stock market. And it also means it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news of the week and the technical charts from all the FAANG stocks, including Microsoft, Tesla, Netflix, and NVIDIA, and more. And we kick things off like we always do with Facebook. Started the week at $204 per share. And believe it or not, the vast majority of these stocks literally ended the week nearly $1 from where they started, despite the big swings, despite the market and turmoil special over on CNBC. The highs and lows ended up being nearly flat on the week. Facebook ended the week at about $203 per share. Meta's e-commerce efforts hit hurdles, with senior execs departing the company. This is related to Facebook's marketplace inside of Facebook, but also Instagram shopping as well. There's a lot of complaints. The fact that Meta services lack some of the basic ability to add different sizes, different colors. They limit the shopping locations or other features like next day delivery, same day delivery. Facebook is basically just kind of a basic e-commerce platform. And obviously execs who kind of signed up for this, including myself as an investor in Facebook at the time, I was very excited about the shift into e-commerce, the fact that you could get transactional revenue, not to mention the kind of ads that can advertise against that kind of content. I was really excited about it, but really Facebook hasn't done a whole lot with the e-commerce over and above what they kind of put out maybe a year or two ago. And certainly execs inside the company are getting kind of frustrated. And one of the things they might be frustrated about is Mark Zuckerberg's fascination with these headsets, as Facebook will beef up their headset with plans for 4 devices by 2024, including a high-end headset that's going to combine virtual reality and mixed reality and targeted at the future of work. That is expected in the fourth quarter of this year, around the September timeframe, with another update coming by 2024. Mark Zuckerberg is obsessed with these headsets, and right now there is just limited demand for those. We'll see if he ends up being on the right side of history of those working out. Moving on to Apple, started the week at $155.85, ended the week just like Facebook, almost on the dollar, being flat at about $157 per share. Apple hired a Ford veteran this week, a 31-year veteran of Ford who's worked in different areas of the company, to come over to Apple and help boost the electric car ambitions that Apple has. This is certainly also your upside with Apple. Obviously, the vast majority of Apple's products are very mature. Even the iPhone at this point, the iPad, obviously the computers as well, very mature business. Now, it's still growing, wildly profitable. As you know, if you've been following the channel for any length of time, when we look at Apple's financials, they're amazing, but we're constantly asking ourselves, how does Apple go from like a $2.5 to $3 trillion company up to $5, $6, $7 trillion company, outside of just simply buying back all the shares, which are certainly doing quite a bit of that. I think we'll even see evidence of that when we get to the Apple chart. Certainly the one product, or one of the products, that Apple could introduce over the next 4 or 5 years that could really boost the market cap of this company is an electric car. And who knows what Apple has up their sleeves if and when they announce something like that. Now, the Oracle of Omaha, otherwise known as Warren Buffett, said he took a $600 million bite out of Apple stock in the 2022 first quarter. When Warren Buffett had their Berkshire Hathaway event, this was last Saturday, I believe, it revealed that they have quite a bit more Apple stock. Now, some of the things that Warren Buffett obviously likes about Apple is they continue to grow that dividend, but they also have a buyback on top of that. Also, when you look at the traditional valuation metrics of Apple, certainly not wildly overvalued like maybe some of the other stocks that we look at in the stock market. Now, Morgan Stanley sees Apple's gross margin staying above 42%. In the most recent quarter, they were about 43%. That was adjusting for a warranty tailwind that the company had, also factoring in inflation as well. I tell you what, this is a company that if they can keep their margins up in that 42% range, and I don't see why they can't in an inflationary environment. Yes, the average consumer has less to spend, but a company like Apple, people just simply cannot go without their phones anymore. Sure, they can make their iPhone 12 or 13 last an extra year. That certainly could be a headwind for Apple, but this company doesn't need to lower its prices. that is exactly the type of company that you want to stay invested in when we are in the environment we're in today. Apple gained share in the tablet market, even as iPad sales declined. If you recall, on our Apple video that we posted a few weeks ago, when they announced their earnings, we noted that the one business segment that actually went down for the company year over year on a quarterly basis were those iPad sales, but they actually grew that market share to 38.6%. That was up 0.4% from a year ago. So they've got nearly 40% market share in that tablet space. Certainly, if that maintains itself, Apple has a long runway for that product to just continue to be a success. Apple supplier says the Zhengzhou production remains unchanged amid COVID-related lockdowns. This is really interesting. The fact that this city is essentially locked down from May 4th to May 10th, but somehow the Foxconn factory continues to operate and their production remains unchanged. I tell you what, the news out of China is really interesting. You're hearing about these lockdowns, but then some of these factories are still operating. Who knows what's going on there? This will likely impact Apple to a certain degree, but a lot of investors, I think, have kind of priced this in a little bit to a certain degree to like a company like Apple, certainly like Tesla, any of these companies that have these big manufacturing centers in China. I think investors have discounted maybe that upcoming 2 or 3 quarters will be disrupted by this a little bit. Your tailwind or your upside is, look at this, production really does remain unchanged and the demand and the margins are there, while Apple and certainly like a Tesla can certainly surprise to the upside in the upcoming quarters and maybe take investors by surprise how well things have gone when the news out of China in terms of the shutdowns has been rather negative. Now, that an Apple store in Maryland is looking to form a union. This is on the heels of other stores around the country starting to do this over at Apple. Right now, this is just kind of bubbling under the surface. We'll see if this has a lot of legs going forward. Moving on to Amazon, started the week at $2,394 per share. This stock ended down on the week by about $100, down to $2,295 per share. Also bubbling under the surface of Amazon are a lot of these unionized talks as well. Amazon has a chance, though, to overturn the union vote in Staten Island. There's a warehouse in the Staten Island region that voted and approved a union. However, these are going to be tit for tat kind of things because Amazon accuses the National Labor Relations Board of intimidating workers to vote in its favor. We'll see how these things turn out. This is almost like a husband and an ex-wife or something like that. There's just going to be a lot of drama with these things. My guess is they'll play out over a longer period of time. Now, Amazon workers reject a union push at a second Staten Island warehouse. This is going to be warehouse to warehouse. It doesn't appear that we'll see some kind of nationwide unionizing, at least in the shorter term. I could see over the long term, you might see that over at Amazon, but by then they might have some of these issues solved with their workers. But these union pushes are really interesting when employment is as low as it is right now in the United States. You get a turn for the worse. Let's say unemployment starts to tick up. It gets harder for people to find work. Well, all of a sudden, I think things like this start to go out the wayside because if it's hard to find a job, if it's hard to get a job, you tend not to force the hands of the companies that are employing you and work for these unions. As long as employment rates stay really low and it's really easy to find a job and kind of move from job to job, well, yes, these unions can absolutely form and it can be a headwind for most of these companies. Moving on to Netflix, this stock went down on the week. It started at $193. This one just keeps drifting lower and lower, down to about $180 per share. We've got south of a $90 billion market cap now on Netflix as shareholders sue over disclosures of the subscriber decline. So obviously we know last time we looked at Netflix earnings, this company, instead of recording a first quarter subscriber gain, they actually had a subscriber loss, and shareholders are upset the fact that Netflix didn't necessarily disclose that until right and kind of drop that in investors' laps. And obviously we saw this stock fall off a massive clip. It was up over $347 per share. And now obviously it's down under $200 per share in large part because of that subscriber subscriber decline. Moving on to NVIDIA. This one started the week at $187 and ended up almost dead flat at about $186 per share as NVIDIA pays a $5.5 million fine to settle SEC charges over the impact of crypto mining. Now, the company was required to disclose in their financial documents that increase in their gaming sales was driven significantly by crypto mining, but they failed to do that. As we've noted, whenever we look at NVIDIA's earnings, they kind of break things out. I think they have 2 or 3 business segments. They have gaming, they have like enterprise, and I think they have automobile. And what they've done is they've lumped crypto mining into gaming because the graphics cards and the products that NVIDIA makes for gamers just happens to work really well for crypto mining as well. It's been a pretty widely known secret or a widely known detail about NVIDIA's GPUs and hardware equipment, the fact that the vast majority of that or a large percentage of them have been used to go to crypto mining, and that certainly has impacted the supply and demand and the availability of those products. NVIDIA, according to the SEC, needed to disclose that to investors, and they have to pay now a $5.5 million fine to settle that. Moving on, analysts see ongoing chip strength in March data despite some seasonal slowness. Now, I think this is one of the reasons why we talked about how a lot of these stocks were really volatile this week. So NVIDIA was as high as like $202 per share and ended up basically where it started in the week. We're getting some wild swings in the market, and that is because we're getting some really good news and we're getting bad news, and it's really nowhere in between. And I'm seeing a lot in the chip sector as well. I'm seeing some analysts saying that the demand has fallen off a cliff, and then I'm seeing other stories like this that saying we're seeing ongoing chip strength. Until you get some real clarity behind this, I would actually anticipate the market to continue to do what it is doing, because obviously the market is trading on uncertainty, and when things are uncertain, well, you certainly get volatile times in the stock market. Moving on to Google, started the week at $2,267. This one actually, believe it or not, ended up on the week closer to about $2,312 per share. Netlist, not Netflix, but Netlist jumps after they won a Google patent litigation. I think the most interesting part about this whole thing is Google will likely have to pay some royalties or something in terms of this settlement, but Netlist first filed the complaint against Google in 2009. Do you think the courts out here in California work really slowly? Well, there's an example of it right there. For the sake of Netlist, I'm glad that it looks like they'll have resolution to that case. Google confirmed acquisition of Raxium and may be used for future AR and MR devices. AR is obviously augmented reality. MR is kind of a mixed reality device. Obviously, Google kind of made a foray into this many years ago for Google Glass. It was a little ahead of its time, but a product like that seems far more closer to reality, and certainly Google could pair its Android operating systems and a lot of the phones that operate on that operating system with these types of devices. It looks like Google is just quietly moving into this area, whereas like Facebook's a little bit more in your face with that type of development. Now, Google is to remove biannual performance reviews after workers complain. This is another sign that you have this really loose labor market where if you're working at Google and you're unhappy, well, it's not that hard for you to go find another job. And this is kind of an example of that. The fact that Google has to remove these biannual performance reviews if the workers end up complaining. I tell you what, if you worked at Google and you just wanted your job, you knew if you lost your job there, it was going to be hard for you to find another one. Well, you probably wouldn't complain and you'd put up with a biannual performance reviews. So some of these things will go away when you see that unemployment rate start to tick up, if and when you start to see that unemployment rate start to tick up. Moving on to Microsoft, started the week at $277, ended up again flat at about $274 per share on Microsoft. Now, the New York City is suing Activision Blizzard with its focus on the CEO. The New York City has filed a suit against Activision, alleging that the company's CEO rushed into its $95 per share deal with Microsoft to escape a liability for misconduct. This could put a whole new wrinkle into this deal being closed, because if this CEO acted in haste to close a deal with Microsoft thinking it would take the heat off of him in terms of the type of misconduct stuff that was already impacting Activision shares, certainly will be interesting to see if that impacts this deal going through. We obviously have the overarching regulatory environment that is putting a threat on that deal. Just another thing that might do it as well. Now, Ubisoft gained on a report that the founding family of that company is considering partner with PEs for takeout. I threw this in here just showing you that we have all this M&A. Really, the Microsoft deal for Activision Blizzard really kicked off a lot of M&A activity inside of the video game space, and we're just seeing a larger consolidation in that. Now, speaking of that Activision stake, Warren Buffett increased his stake in Activision. Now, Warren Buffett said he's really just playing kind of an arbitrage spread on this. He bought the shares right here at about 77 some odd dollars, or somewhere in that range. He knows that the closing price is $95. That's obviously about $17 or $18 higher than where the share is right now. Certainly if that deal can close in the next, call it quarter or two, that's phenomenal gains on that. I don't know if Warren Buffett has something else up his sleeve, because I have to imagine someone like Warren Buffett, maybe not him personally, but his team that is making these decisions, they're very aware of what's going on in the District of New York. They're very aware what's going on inside of Microsoft. Warren Buffett has a pretty close relationship with Bill Gates, who I know is removed from Microsoft, but probably has a direct line still into the company. I have to imagine Warren Buffett knows more than the average person based on this deal closing. I'm assuming he's playing this arbitrage spread, but if this deal goes away, maybe it's a way for Warren Buffett to take a larger stake into that company. I think he's playing the arbitrage spread there. I think we'll take him at his word, but boy, there's a lot of smoke around that deal, and certainly seems like there's a fair amount of risk there, because obviously if the deal flows through, we'd expect Activision Blizzard shares to go down like a lot of stocks have since that deal was announced. Moving on to Tesla, started the week at $856 per share, and believe it or not, we were up on the week at $864 per share. Very volatile week in the stock market, but like you saw, most of these stocks actually ended flat. Now, Vale signs a long-term nickel supply deal with Tesla. Vale is a public company. It's not necessarily one I have a lot of people recommend that I do a video on it. I tell you what, I've followed Vale for a really, really long time. It's not that great of performing of stock, okay? But this is a very, very good deal for Tesla. Vale being one of the larger miners, and obviously Tesla being one of the largest producers of electric vehicles. Great combination there. Now, Tesla looks to production in Shanghai, and they're looking to get it back to the targeted levels. This kind of goes along with what we were talking about Apple. We're getting kind of like mixed reports out of the Shanghai factories. In this case, it looks like Tesla is increasing their production by about 26 vehicles per day. It doesn't appear that this factory is running at full capacity, but I will say that I believe that the market probably has that priced in a little bit with Tesla. The fact that they are not going to get to full production over at Shanghai, maybe for, quite frankly, the rest of the year. Now, Elon Musk is expected to be Twitter's temporary CEO after the deal is closed. Obviously, Elon Musk made a deal to buy Twitter and to take it private. It appears that, at least according to rumors, he might be the CEO of the deal. I think that is related to Tesla a little bit, because this obviously would take his attention away from Tesla at the certain time. But obviously, as we know with Elon Musk, he owns a wide swath of companies. As someone that obviously has proven himself to be successful despite having lots of things going on. Now, Twitter turned positive amid report that Elon Musk is seeking extra financing for the buyout. This also relates to Tesla, because we talked about how Tesla stock went down about a week or so ago, and most of that, or some of that, was attributable to the fact that Elon Musk was having to unload his shares. Now he's got his billionaire buddies like Larry Ellison and a few others putting up money for this deal. It's going to make Elon Musk a little bit less financially tied to this deal. And certainly that can be beneficial for Tesla, because let's assume the entire market just continues to sell off. Tesla's probably not going to be immune to that sell-off. And that could create a situation where Tesla shares, which are being held as collateral for this Twitter deal, could be forced to be sold. That certainly would be a bearish thing, at least in terms of stock price for Tesla. Now, Chinese EV deliveries dive as COVID disruptions continue to come to bear. We also saw delisting risk from NIO and Li Auto and XPeng this week. That certainly drove those stocks down as well. But obviously, we're seeing shutdowns and supply chains and all things being interrupted in China. That's why a more diversified EV maker like Tesla, certainly one I would far more recommend than the EV makers just making vehicles there strictly in China. Obviously, we saw that this week with NIO and XPeng and Li Auto basically tanking. Moving on to the technical segment of the show, don't be surprised if the SEC accuses us of insider trading because we perfectly predicted what would happen to Facebook's price action over the course of this week. We've identified this downward channel with Facebook. It started with the big gigantic drop we had after 2 earnings ago. Back in February, we dropped all the way down here to 240. We broke through the 220 level, came down here and bottomed at 187, peaked it back up to 232, but it was a higher low. So we're starting this downward channel. Now we moved down lower and made a lower low down here at about $180 per share. I talked about how last week after earnings with Facebook, there was a massive high probability that we would walk all the way to the top of the channel. You can go back and review the channel and review our FAANG stock recap show last week. The timestamps are in there. It would take you 2 or 3 minutes to see that I told you this stock would likely come all the way back up to the top of this channel where it would meet 2 areas of resistance. One area here at 220, which was kind of the previous highs that we made right before the pandemic, but we also meet this lower trend line. And yes, of course, Facebook stock has gotten rejected. And now we have to anticipate that Facebook stock continues to move to the bottom of the channel. We have to assume that this technical pattern is in place until it is not. It is not until you get a break below this channel that would be incredibly bearish with Facebook. We've certainly seen this with Uber and several other stocks this week that were in a downward channel and actually broke through the bottom of the channel. Incredibly bearish move. A very bullish thing with Facebook would be a bust above the 220 range, and I actually think you need to get above 228. That would signify, at least in the shorter term, some kind of a reversal in sentiment and certainly a reversal in momentum. We have to assume the momentum with Facebook continues to be down. We have to assume that this downward channel is intact. Again, this is the technical segment of the show. If you don't agree with my assessment of this, you don't agree with this technical pattern. It's not that you disagree with me. This is not an opinion that I'm telling you with Facebook. I'm telling you this is what the technical pattern is telling you. We are in a downward channel in this one until that channel is broken. Now, moving on to Apple, we are hugging this lower trend line despite having some massively tall candles over the last few weeks. The stock ended basically where it was at the start of the week. Again, right on the top of this channel. We're just continuing to walk it down with Apple. We are not in a trend reversal. We are not, I think, even in a buy the dip moment until you get, I mean, quite frankly, I'd want to see this stock get way above the previous highs that we made maybe back here at the 150s, 160s. Until you got comfortably over that, I don't even think you consider this stock out of kind of the mini downtrend that it is in. A bearish move would take us back into this channel. Obviously, I think we've got evidence that Apple's probably stepped in with their brand new buyback authorization. I would guess with the increase in volume here that you see with shares that Apple is trying to defend this stock at these levels. If you're a longer term investor, you have no exposure to Apple, this is the first stock you've ever bought, those types of things, these are not terrible places to buy, but just understand we are in a shorter term downtrend with this stock, both in this channel, but it also appears to be making maybe a little bit shallower channel up here where we've made some highs here, lower set of highs. Again, even if this stock rallies super hard next week, wouldn't surprise me. We have a little bear market rally. The sellers just drive up. I tell you what, Apple could rally all the way to like 170, 175. It could do it in a day, 2 days, a week, 2, 3 weeks. It's still not technically out of a downtrend. So if you're out there like me, you've got a fair amount of cash sitting on the sidelines, or maybe you just feel like buying the dip in these markets, just understand it's going to take a heck of a move just to get us technically out of a downtrend. Quite frankly, Apple would have to go back to all-time highs to really break out of that trend. Moving on to Amazon. Obviously, if you've been following this channel for any length of time, the stock was sideways consolidating for the longest time, and more recently, it's turned into a Japanese steak knife where we were up here at $3,400 per share, and then after earnings, we came all the way down here at about $22.50 on this stock. It appears to me that Amazon wants to consolidate a little bit down at those ranges, but we have to keep in mind there is areas of support, but there's all the way down here at about $2,000 per share. That would be another 10% drop on Amazon shares. Considering the steepness of this move that Amazon's made over the last just couple of weeks, we'd have to assume this stock will have some kind of a relief rally or a dead cat bounce, but there's overhead resistance basically across the board on this stock. Back up here at 26, back up here to 27. It would have to make a heck of a move to get back above that, and even if it does, the stock is still technically in that downtrend. So even when you have these days like the stock market had this week, where you have these massive rallies either intraday or kind of intra-week, you've seen that the following day the stock just kind of gets slammed right back down. And that is because from a technical perspective, again, computers are trading a lot of this. From a technical perspective, this stock has to move big time just to get out of this technical pattern. Me personally, I'm waiting to pull back into clear areas of demand for this stock. In the case with Amazon, it's down here at 2,000. That would be the first area where I'd kind of be interested in. The other thing we're looking is maybe signs of reversals where you start making higher sets of lows. So the stock starts making that type of formation where the stock starts chopping upwards. That's what I'm waiting for in these markets as well. Moving on to NVIDIA. This one's looking a lot like Apple. It's pulled back to like this trend line that we've had in really since the highs make back in November. And we've kind of drawn this in and we've just left it in here. We're now kind of hugging it right now. And we're just walking our way back down to the sideways consolidation that we have down here south of $150 per share or so. You could plus or minus probably 5 or 6% on this one. You could probably even bust this all the way up into about the $165 per share. We're only about $10 to $20 off of that kind of price target with NVIDIA. We do have to keep in mind, we do have earnings on this company right around May 25th. So we're just a couple of days away, but we've got enough read from AMD and Intel. I think they'll have a pretty good quarter over at NVIDIA. It'll really be the guidance that will tell the story. But right now, this stock is in a pretty good downtrend. It wouldn't surprise me if we have some kind of relief rally or rally where this one goes up, but there's areas of resistance really across the board up here at 220. There's an area here at 208. There's another area here at 230 where I think sellers would step in. And if the sellers step in, it would just change their momentum and continue to go down. Now, speaking of going down, Netflix just continues to go down, but our longer term blue trend line, okay, we constantly have to adjust this to fit our narrative, right? But this longer term trend with Netflix is still within like 5 to 10% of still being intact. It's not completely alarming that the stock has kind of broken through this level, but right now this stock is absolutely a falling knife. Wouldn't necessarily want to get in on this one unless it was some kind of intraday or intra-week trade. Again, just like Amazon, we are looking for areas of support for Netflix, but keep in mind, it blew through 467. It blew through 416. It blew through 380. It blew through 288, and then it blew through what we thought maybe was the rock bottom down here at 240. This stock is just slicing through areas. We are really technically just waiting for Netflix to start making higher series of highs, higher series of lows, and starting to chop upwards. Does that mean you get Netflix at the rock bottom price or at the bottom? No, but that's not what you're trying to do from a technical perspective. You're really trying to stop yourself from buying this stock at 420 and then watching it go down to 180, or if the really bear case is in for Netflix, buying it here at 180 and watching it drop all the way down to $100 per share. These valuations that we saw with some of these stocks might not be reached ever, quite frankly. Netflix may never get back to over $600 per share, or more specifically, the market cap that it achieved when it was up over $600 per share. We have to start getting comfortable with that as investors, and we know for a fact these higher levels are not coming back anytime soon. It might be over the course of your lifetime, Netflix is able to get back to these levels, those are things that you want to keep in mind. Now, moving on to Google, looks almost identical to Amazon. The fact that we consolidated sideways, we didn't do it quite as long over at Google. It also followed a massive rally that this stock had, but now we've completely fallen off the cliff. We're consolidating pretty tightly down here between $2,200 and $2,400. There is an area down here south of, I'll call it about $2,100 per share, between two, really almost the same level as Amazon from a dollar perspective, right around $2,000 per share, give or take 5 or 10%. If Google were to pull into that area, that'd be the first area where I'd be kind of excited about it. But from a technical perspective, we're looking for signs of bottoming. That's higher sets of lows, higher sets of highs. Keep in mind, you have overhead resistance on this stock back up over $2,500 per share. In fact, the stock got to about $2,450 this week before sellers stepped in. That is just showing you that we've got lower sets of highs all along here. Until that trend reverses, you have to assume it's just going to continue with Google, that this stock is just going to continue to work its way down. And as it works its way down, certainly buying opportunities. Moving on to Microsoft. Microsoft is actually in this downward channel. It tends to find support right here at about $270 per share. That's about where the stock ended. This is actually where I have bought the stock more recently, not a heavy amount of it, but kind of a smaller add to a position I already have in Microsoft. It's a little risky because if Microsoft does break this level of support, if it continues in this downward channel, and if you were to ask me what's the probability of that happening, I would actually say it's pretty high. I would say it's high that Microsoft breaks this level at 270 and we continue to move down this channel, because there's not really a super clear area of support until you get south of about $230 per share on this one. Whether or not we get there with Microsoft remains to be seen. This company does pay a dividend. It is executing on a buyback. It also is making those large acquisitions, and if those large acquisitions close, it gives Microsoft a much larger business to deal with. I mean, even larger than it already is dealing with. And certainly if they can get some cost synergies there as well, kick out some of these idiot executives that make too much money, and continue to generate large revenues and profits from the Activision and the Nuance Communication deals that they have. Well, I tell you what, the market cap on this company can go way up, and that certainly can be beneficial for the stock price. Right now, a little bit of a holding pattern, in my opinion, with Microsoft. Now, moving on to Tesla, I keep saying week after week, this one is making the most interesting technical pattern. It is continuing to kind of cone out. We're making higher series of lows here. This is what you're looking for when we're looking at the stocks that are falling off a cliff, like an NVIDIA, an Amazon, a Facebook, a Netflix, even like Google. We're actually looking for something like this. It's not the first sign to buy, but it's the first sign to you that buyers are stepping in, because we see with Tesla, this stock was in a very, very steep downtrend like a lot of these stocks. It was up here over about $1,200 per share. It bottomed back in February down about $715 per share. And we've seen ever since then, buyers have stepped in at a much higher price. The stock continues to rally. Now, the key thing is, and the contradictory thing is, that we're making lower series of highs while making higher series of lows. Some people will call this a pennant or a flagging formation. Typically what happens, and again, you don't tune into this technical segment of the show to have me tell you this stock's going to go up or down, but as we reach the corner of this, which really looks like it's going to happen sometime in the summertime, we'll keep moving our price action all the way here. Again, if this technical pattern stays in place, Tesla will resolve itself right around about $1,000 per share, somewhere in the middle of the summertime, and it'll want to either break to the upside, and I tell you what, if it breaks to the upside, you're at the very least retesting the $1,200 level. So you're going to have a 20% pop in this one, and you're going to retest that level. If you get above 1,200, I don't want to say the sky is the limit. I don't want to seem like one of these people that think Tesla's valuation can just go to infinity. I don't believe that, but I believe you could go from 1,200 to 2,000 on this stock and in very short order. The reverse is also true. If you come here to 1,000 and all of a sudden the buyers just dry up, the liquidity is just dead in Tesla stock, well, you're coming down big. I think you'll break through this $900 level, and I think you retest the $700 level with Tesla. If you get another test down there south about $750 per share. I think that can be a buying opportunity. Just understand from a technical perspective, it'll look ugly, it'll feel painful, but in my opinion, from a financial perspective, also the inflationary environment we're at, Tesla was one of the few stocks that actually could grow their income, grow their margins, and grow their profits in this difficult environment. We pretty much didn't see that across the board. That makes Tesla a rare stock and one that I continue to hold as well. That was the FAANG stock recap show. It was a volatile week, but as I showed you, most of these stocks actually didn't move the whole week. So the key lesson for all of you today is don't let the volatility discourage you. Don't let the big green candles make you super excited, and don't let these big red candles really scare you. At the end of the day, the vast majority of these stocks were exactly where they were on Monday. And we'll see what next Monday has in store for this. One thing is for sure, we'll be back again next Friday for the FAANG Stock Recap Show. I hope you all have a great weekend. Back again soon with more. Good luck with your investments.